Bad news for the Safaricom shareholders. What do I mean? If you have bought Safaricom shares, this might not be so good news for you. Before I even say anything as to why I'm saying that, I want you to approach this video with utmost intelligence. Don't be emotional, don't be what? Let us think, me, or rather you and me, let us think through this video or this message. And at the end of this video, I will answer the question that you are about to ask. Okay, should I sell my shares? Should I retain them? I will answer that question at the end of this video. So listen. This is Good Joseph. In case you're watching me for the first time, go ahead and hit that like button. Make sure that you subscribe so that you'll be notified whenever I upload a new good video. And if you are a returning subscriber, thank you for your eyeballs. Let's get on the business. Why am I saying this is the bad news for Safaricom shareholders? We all know, and if you didn't know, Safaricom is about to borrow 40 billion Kenyan shilling. That money is meant for what we call the capex. Okay, what is it? That is a capital for expenditure. Are we together? What does it mean? It's a capital that they are looking for the purposes of expanding, infrastructural expansion, precisely the 4G and the 5G, both in Kenya and Ethiopia. Again, if you didn't know, Safaricom has a huge presence also in Ethiopia. Now, this money that is coming in a way or the other, not even in a way or the other, it will actually be what we call an expense or a fixed expense. Why? When they borrow that money, obviously it's no brainer. If you lend them that money, and of which I highly encourage you to invest there, put your money there. If you lend them their money, at the end of the physical year, if they will be paying this bond, say semi-annually or at the end of the year, they are yet to say that, it means that interest that they are paying you, it's some money that of course they have made out of that what they're investing. It means it will be an expense. And as we speak, you can go verify this information. According to the media reports, Safaricom debt is already sizable. It's not that badly off. By the way, Safaricom is one of the biggest companies, not only in Kenya, but in Eastern Africa. At the end of the March 2025, they have a long-term borrowings that is equivalent to largely 61.2 billion Kenyan shilling and short-term of around 55 billion. Again, you can always verify this information. Are we together? So now they are adding another 40 MTN. What is 40 billion MTN? That is medium-term note. Again, they are not borrowing, they are smart. They are not borrowing all this money at a go. They are borrowing it in phases. Now, this is me thinking out loud, and I want you and me to think out. Safaricom, they are known to pay a DPS, that is dividend per share, of largely Kenyan shilling 1.20 all the way to like 1.55 shilling. What do I mean? DPS is that much they pay you per every share that you own. This is what they largely pay. Are we together? So if you, that's why I said we need to reason out. So you are the CEO of this company. There is a 40 billion coming in as an expense. And that means you'll have more expenses, obviously. And then, of course, this money, you're taking it for the future development. So let us argue here. For the short term, for the what? For the short term, there are more likely chances of them reducing these DPS. Probably, I'm not saying this is what they will do. I'm just guessing. It will be less than it. Probably. May not be true, but I'm saying probably. That's why I said, let us reason together. Because there are some expenses coming in. Why? If you can just read the history of what is happening in Ethiopia. Ethiopia is the second populous country in Africa after Nigeria, with over 100 million people. And it needs quite of an infrastructural development for them to tap the market. Remember one thing, the Ethiopian money called birr, they had some deflation, or the money, they had some issues with the birr, and the birr depreciated, and that's why Kenya surpassed Ethiopia as the biggest economy in Eastern, not East, Eastern Africa. That depreciation of the currency actually destabilized Safaricom, though they didn't overly realize a loss, but it was a hit in the business. Now, this money is for the infrastructural development. So for short term, as a CEO, it is no brainer. Even you, when you borrow money to do some development in your business, And let's say you are catching up, say, a holiday every week, you might be like, you know what? Because now I have a new expense that was not there, I'm more likely to cut off my vacations here and there so that I can be able to accommodate this new foreign expense. Though I'm looking for the long term, but for the short term, might have a negative effect. Whereby, if you solely invested in Safaricom for the purposes of dividends, might not be so good for you for the next 1 to 2 years or so for that purpose. But if you went there for long-term capital gain, Safaricom has a very brilliant future. If you were to read the numbers in terms of the returns of this company, it is registering billions of money. Are we together? Now, for that regard then, if you ask me, this is what I've actually analyzed. I love putting all the information here for you so that we can go step by step. Now, what happens here? I said the money that they're looking for is for the capital expenditure for the purposes of the 4G and the 5G enrollment to make sure that they tap to many people as possible. So this is no brainer. This tells you they are looking for the long term. For the long term. And the purpose of them borrowing this 40 billion, they have actually done the mathematics and realized they will pay the debt. Even me as Joseph, based on the numbers that they are reporting, Safaricom will be very comfortable to pay this debt without any problem. They have the financial muscles. In a year or 2 years ago, KCB, arguably the biggest bank in Kenya, they didn't pay dividends. If you're a KCB shareholder here, there is a year that I stand corrected. This year, this video I'm making it on the year 2025. Probably it's not last year. I think it's the other year. Again, you can verify this. KCB did not pay dividends. Why? That's all the time they were acquiring some new banks here, some infrastructural development here and there. I mean, it is normal in a business. When you are expanding, you can tell the investors, hey, hold on. Sure, for now, don't eat. For now, you won't get the dividends. But whatever we are doing here, we are likely to get more money in future. Therefore, the returns will be there, which is very normal. No need of panicking, no need of worrying. That is very normal. So most likely we can see this. Either we won't have a dividend on Safaricom. I'm not sure. Just saying we are analyzing. Are we together? I'm not saying this is what will be. Me and you, because we are investors, we are analyzing. Or if the dividends will be there, might be a bit low. Because we have a new expense. As much as this MTN is being rolled out in trenches, meaning in phases, not like once. Now, this is what I want us to discuss. The economical risk, stock market risk. Infrastructure investments are not always risk-free. Delays, cost overruns, and regulatory charges could erode expected returns. Obviously, them enrolling these, what we call the infrastructural development, like maybe let's say having the masks, whatever. I overheard that they're probably gonna do the cable C and whatever. I saw Safaricom also is partnering with, what we call this Elon Musk company, a Starlink, in a way to make sure that this is good news for this company in future. If you ask me, I can see this company becoming a unicorn one day, but I'm talking about the short term. When it comes to the dividends, if probably you are planning to get a quite of a decent dividend, you see, these investments do not give returns instantly. It's no brainer. Once you invest, everything takes time. So once they do all this infrastructure, may not give those returns instantly. I mean, who foretell, or can you foretell that the beer was about to misbehave the way it misbehaved? And you know that devaluation of the beer actually gobbled down some couple of billions of dollars on the Ethiopian economy. That's why they were ahead of us in terms of the economy. Now they are behind us. Okay, let's continue. Now, what happens is that we might have some of the good news on that regard, because I know you're waiting me to tell you, should you or should you not retain the Safaricom shares. Let us look some of the performance of this company. Safaricom reported around like 388 billion total in gross revenue for the year ended March of 2025, with a net income of around 69.8 billion. Can you imagine that? That's quite of a good money. I mean, if they can be able to net 69.8 billion after they've done all the deductions of the expenses, you know, and what have you, paying the taxes and what. That's quite of a good amount of money. This indicates a healthy business that might be able to absorb additional debt if growth materializes. That is the point I want you to underline. If the growth materializes, if this infrastructural development that they want to do materializes, then of course it means this company is on a healthy trajectory. If I was to do my simple analysis of red, yellow, or rather green, yellow, and red zone, Safaricom is definitely not a red zone. No, it is not. Actually, it is on a green zone. And do you know why they were even given the mandate to actually borrow that 40 billion? The CMA did all the analysis and they realized the company has a healthy financial record. It can manage to do that. It can manage to pay that particular amount of money. Now, this is what I want you to listen here very carefully. Let's check out on what we call the dividend policy and payout history. Historically, Safaricom dividend policy has been relatively generous. True? In the past reports, the board has committed on paying for about 80% of the net income, obviously excluding what we call the certain adjustments. In the financial year for the 2025, they maintained the same dividends of the DPS, that's the dividend per share of around 1.20 shillings per every share that you own there. Are we together? So therefore, the strategic rationale of the bond will fund growth investment, that is a capex, rather than the cover operational losses. They are not borrowing precisely based on what they are offering on the public and the socials and the media. They are not borrowing to cater for the losses and what have you. Not like the way Kenya borrows to pay the previous loan that they had. No, they are borrowing for the purposes of development in future. If they execute well, this investment could drive future earnings growth, which could support and even grow dividends in long. Listen there. Which could do what? Which could support and even grow dividends in the long run, not short run. Some of the notes may be, okay, let me not go there. Anyway, that is what, now this is what I can conclude on this. Remember there's something I told you I'm going to share with you at the tail end of this video. What is my conclusion? Are reduced dividend likely? Short-term risk of 1 to 2 years, yes, we are likely to realize a reduced dividends. But again, I may not speak on the behalf of Safaricom. I'm just trying to be a critical thinker on this. We might have a reduced dividends for the short period of time, let's say for the first to the second year, or even we can have a spillover to the third year. We may have what we call the moderate and the long term. Now, what is my submission on this video? Should you sell your Safaricom shares? The big answer, or the answer to the question, is no. Retain them. You should be comfortable. The only part that might be a bit disadvantaged is when the management of the company decides to either slash some of the dividends that they're going to pay at the end of the fiscal year, or even don't pay dividend at all. So there is that likelihood. And I've given you a company which is one of the blue chip company called KCB. KCB Group did not pay. There is a certain year, not far from when we were watching this video, they didn't pay the dividends for the purposes of growth. Not that the KCB made losses. No, it made profits. But it's only that as a business person, be like, you know what? We won't share those dividends. Let's retain it. And by the way, the year immediately, or the subsequent year, or the year that followed, they paid a very handsome dividend. So it happens. I'm saying this because sometimes I deal with clients who have solely invested on a particular company. Some even have invested quite a fraction of their pension into these companies for the purposes of dividends. But if you're in Safaricom for capital gain, stay there. Don't even think about selling your shares, because the future of this company is brilliant. So the answer to the question is, should you sell your Safaricom shares? No, do not. Assuming everything goes well, this billion is targeted for the infrastructure development, and such happens, and then they enroll. No wonder where you go even to the most interior places, you realize that some of other telco companies, the internet is not there. But the Safaricom one, still the bar is full because of that infrastructure. You may not be able to realize the loss or the profit within that short margin. But in the long run, as an investor, it tells you that it's a good time to actually hook your money there, retain your money there, stay put for the long run. But for the short-term people, because we usually have those kind of guys, we may not be able to realize quite of a good fruit. Again, I might be totally wrong on this. They might be even comfortable. Probably they already have the plans to make sure that they retain, because I also read somewhere, to make sure that they retain the current dividends that they pay, the DPS, to the investors. Because investors are great people, you need them for the purposes of growth. They might actually have a plan of maintaining the status quo as far as the dividend is concerned, as much as they borrow and make sure everything runs well. But let's not assume that it's as usual as we think. That's my submission. Please, 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 I beg you. This is a discussion. I'm not here because I know everything. I'm encouraging you on the comment section. Tell me what you think as an investor. What is your analysis? Might I be right? Might I be wrong? Are we together? Let's have the discussion. What do you think? This is Good Joseph. And in case you feel like, oh my goodness, this guy is talking about strange things that I've never heard, you don't even know how to invest on shares or stocks, this is my number. You can shoot me a text on my WhatsApp, precisely a text, please, not a call, a text on my WhatsApp. Then we can discuss the investments. At all the time, make sure that you leave a comment on the comment section. See you the next one.